Hello, and welcome to another episode of the of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So, welcome to the session. Today, we'll be talking about whether the US economy is slowing down. We know that the GDP numbers are coming in later in the afternoon. So, we'll be trying to understand where the US economy is headed and how the markets might react to the news. So once we go through this, hopefully everyone will trade from an informed perspective. So as always, this is an educational session. It's not investment advice. So you should always practice proper risk management and do your own due diligence. So let's get things started. So first things first, we do an overview of the economic calendar. Of course, we have had quite a number of things happening over the week. So we had the Chinese maintain their interest rates level as expected. Then we had a couple of surprises with the S&P Global Flash Manufacturing PMIs, which majority of them missed expectations, while the services were better than expected. Then we had CPI coming in from Australia at 3.5%, showing that inflation is moving towards the upper side. Then going forward, we had retail sales from Canada, which missed expectations. Core durable goods orders in the US, which were weaker than expected, whereas durable goods orders at 2.6% was better than expected. And then now on Thursday, we are focusing on the advanced GDP quarter over quarter for the US, and this represents the first quarter of this year. So in the previous reading, we had 3.4%, and now we're expecting a 2.5% report. So there is a good chance we could be seeing something surprising in this afternoon, and this could impact the markets going forward. So hello, Francis Gashago, and thank you for joining the session. As usual, you guys are welcome, and if you have any questions relating to the presentation, feel free to type that in the live chat section. Remember to like and share the video, and we will be looking at those questions as we approach the end of the presentation. So the next part I want us to talk about is the current trend we have been seeing with US GDP. So if you do a smaller period of, let's say, 5 years, you'd notice that GDP in 2018 was currently rising from 0.6%. We go to 2.2%, then 3.4%, and this is per quarter, and topped at 4.6% before it started slowing down to 2.6%. And then in the quarter one of the COVID year, there was such a huge drop due to the lockdowns and everything. So GDP contracted 5.3%, and in the second quarter, it was down 28%, meaning that the US economy was an inflation environment. So immediately after that, there was a very strong recovery of that 4.8%. So it doesn't mean that the economy grew by that 4.8%. Much of this growth is as a result of the big drop that we had experienced in the previous 2 quarters. So that maintained that momentum at 4.2, 5.2, we go to 6.2, 3.3, and then 7% in quarter 4, 2021. So getting into 2022, there was a drop of 2%. And 0.6%, which means that the US was in a technical recession during this period before it jumped higher to 2.7%. So towards the end of 2022, 2.6% was the number. Then last year, we had this 2.2%, followed by 2.1%, and then a big spike higher of 4.9% before it weakened in the previous reading down to 3.4%. So now we get the next number today, and that number has the potential to drop back to the previous level of around 2.1%. And if you check the economic calendar, you would notice that the overall expectation later in the day is expected to be around 2.5%. So this is a big thing in the markets, especially considering that the Fed has been looking to slow down the economy. So slowing down the economy means like pushing the economic growth per quarter close to 0%, so that they're able to win against inflation. So remember, the GDP, short for gross domestic product, is a measure of all productivity within an economy. So if an economy is experiencing high inflation, as we have seen with the US latest data report came in at 3.5%, then it basically shows that there is increased productivity, increased jobs, and of course, increased performance across all sectors. So when you see that the GDP is rising, it means that you are going to expect heightened inflation within the economy. So when we saw these big numbers happening right after COVID, they led to a very strong inflation in the US economy. And they may not be the cause. The GDP is only an indicator. So there are underlying factors for the inflation. But then when you follow the GDP and you see strong growth, then it's often followed by high inflation. So that leads into the narrative that a lot of our traders have been following to set their trades in the market. And that narrative has been if we continue seeing a strong US economy and inflation remains high, then the Fed may consider holding rates higher for longer, which is quite positive for the dollar. So on the other hand, if economic growth is weakening and getting closer to 0%, then in that case, the Fed might have a chance of winning against inflation. And in that case, we could be seeing a much weaker dollar. So that has been the narrative we've been following over the past 2 years, and so far it has been rewarding in terms of trying to speculate the direction that the markets are taking. So that being said, I would like now to switch over and go through some things in the economic calendar. But before that, let's look at the expectations for tomorrow too. So tomorrow, being Friday, we know that we'll be having yet another market snapshot at exactly 11 a.m. But before we even get to 11 a.m., there will be news coming up. So the first major news will be the Tokyo core CPI, which is a measure of inflation in one of the top Japanese provinces. So in this case, there is an expectation that inflation slowed down from 2.4% down to 2.2%, which is not consistent with the Bank of Japan's expectations. The Bank of Japan has been looking to achieve consistently high inflation so that wages can increase across the economy sustainably. So inflation slowing down is not pretty for them, so we might see some aggressive reaction to this. So most important news for the morning will be the Bank of Japan interest rate decision, where it's expected to hold interest rates steady at 0.10%. So then we'll be looking at the Bank of Japan outlook report. It will be around 5 p.m. And then later on, the Bank of Japan press conference, which is expected to raise increased volatility in Japanese yen pairs. And that volatility increase is expected to follow what has been happening in the markets this week, where the yen has really weakened against other currencies, with the US dollar making a record high against the Japanese yen. So later on, we'll be having the Fed's favorite measure of inflation, which is the core PCE price index, short for personal consumption expenditures. Then later on, the revised University of Michigan Consumer Sentiment Survey, both of which will be covered in tomorrow's market snapshot. So as for now, we move on and focus on technical analysis. And once we cover the technical analysis, hopefully everyone will be able to understand the prevailing chart patterns. So I was just reminded that I wasn't sharing the calendar. So this is what we are looking at tomorrow. Tokyo core CPI, 2.2%. Bank of Japan policy rate. This is the interest rate decision, 0.10%. Then the core PCE price index at 3:30 p.m. before we look at the revised University of Michigan Consumer Sentiment Survey at 5 p.m. on Friday evening. So now, moving on, we'll be looking at one more item, and that is market analysis. So hello, Faith. Hello, J Squad. Thank you, guys. So there's a kind request to check on Pound USD. So let's move on to technical analysis and try to understand what's moving in the markets today. So I'll be starting by the first item of business, which is the major event happening in the markets today. And this is the USD JPY currency pair. So we noticed that there was a pattern that was repeating itself, where the USD JPY hits a resistance, keeps playing along that resistance and then attempts to make a reversal in the opposite direction. So we can see the attempt here, market moving down with big candlesticks, and then an immediate recovery, plays around there, and then eventually breaks towards the upper side. So for anyone who was following, we saw this leg was extended for a number of days before the market started forming a similar pattern. So it forms a high, plays around this area here, makes an attempt to make a huge drop, fails and comes back to the same area immediately, plays for 1 or 2 days around the same area, and then eventually makes that breakout. So the breakout happened yesterday. So what we were expecting here eventually happened here, and then it accelerated all the way up, and there's still more room for upside potential ahead of the BOJ. So there is a good chance we'll be experiencing some upside potential in USD JPY currency. So I just lost my power. I don't know what's happening with Kenya Power, but hopefully we will be able to continue with what we have. So as we continue speculating on the continuation of this rally in USD JPY, you also notice that other pairs that traded against the Japanese yen are also gaining towards the upper side. So in this case, we had a clean breakout in New Zealand JPY. There's quite a strong rally, and of course, the previous high is just nearby, 93.433. So there's still more room for upside potential in New Zealand JPY. So as for the dollar index, we saw immediate recovery yesterday after the big drop that happened on Tuesday. So Wednesday market making a recovery, but today the dollar index has been pretty weak. So with a pretty weak dollar index, it seems more likely that other currencies will be gaining against the dollar. So for the euro, we have seen the market breaking this resistance on Tuesday, pulling back to retest it yesterday, and now accelerating higher towards our target. So now I would say that the euro USD is at a key decision point where we could either see a breakout or a pullback. Of course, if there's a pullback, then the immediate support is yesterday's low. So we see the market drop into this area here. Of course, if the euro USD continues to rally, then we might be looking at levels that are much higher, potentially around this area here. So we can both identify this area here as well as this area as major supports. So in this case, a strong rally in euro USD would likely lead to 1.08030 and a drop to 1.06855. And that might be happening towards the announcement of the US GDP quarterly results. So there was a request to check on pound USD. So we saw that the market would drop to this area and then make a strong bounce to this area. But since making this bounce, there was a clean break on Tuesday. So market pulled back a little and then completed the journey early this morning. And now since we are approaching 1.25192, further bullish momentum would mean that the pound makes a rally and eventually gets to 1.25752. However, I would be quite concerned about this area here, mainly because of what happened to price action the last time the price was trading around this area. So it was acting as support and now could be turned into a resistance. So you have to be careful about this level of 1.25192 before trading higher to 1.25752. So before 3:30, we could still be seeing some further acceleration. Both the pound and the euro continue gaining against the US dollar. Then we have the New Zealand US, which has managed to make this break here, hit the resistance, pull back a little, and then head higher. And now, as we approach this major support turned into a resistance at 0.59658, we'll be observing this area for further momentum. And if there's further momentum, then we start looking forward to the next level in price action, somewhere around 0.59938, which is very close to a round number. And as always, if your stop loss or take profit is close to a round number, then you start working with that round number. So 0.6 might be the area to be looking out for if you are a New Zealand USD trader. So as for the dollar trading against the Swiss franc, we had a major resistance level here. So after the market broke this resistance, kept going up, it eventually go to the target. And in getting to the target, notice how there was an increase in selling pressure. Then another attempt to break the area, followed by an increase in selling pressure, which increases the chances that the dollar is unable to break that level against the Swiss franc. So we could be seeing some formal pullbacks happening from this area here, especially when you consider this, the way the high prices were rejected in the first time here, and then the acceleration we are seeing here in the last 4 candlesticks. So it seems more likely that the market might be headed lower. And of course, the immediate bottom is somewhere around this area here. So it makes more sense to speculate on a weaker dollar, targeting 0.90863. So as for USD CAD, attempt play, we identified this area as a major resistance area. So the market found the resistance at the same point, and now the market is dropping. And of course, now we work with the most recent low. So this for an intraday trading setup makes a lot of sense. The market will eventually get to this point, and of course, a potential extension dropping to 1.36108. So as for gold, we saw a very strong bounce happening at 22.91. Once the market got to around 23.24, there was quite a struggle to break this area here. But now from the price action we are seeing this morning, it seems more likely that gold has resumed bullishness and our target becomes alive at 23.55. So expect some further upside in gold, especially backed on a weaker dollar. So in this case, after the big drop that happened here, we are seeing a reversal and a potential rally to 23.55. So US equity indices made a surprise reversal after trending downwards for 2 weeks. So from this form, we had speculated that the market would top at this area here, and then we observe the price action. If there is an extension, then we target this area. So there was no extension from Tuesday, Wednesday. It was the same high, and now we are seeing some form of weakness coming into the markets. Potentially, we could be seeing a reversal. So the idea of a continued rally here is basically failing. And if you look at the 4-hour candlesticks, they're indicating that sellers are entering this market. Now we could be headed much lower. So in this case, it's more likely that the market will be headed back onwards. So that's 7,606 for the Dow. So for the US Tech 100, if you look at the 4-hour chart, these are pretty strong reversal after we hit this resistance. Yes, the market is stalling at the current level, but then there's still more likelihood that the market continues with the correction and gets to 16,970. So there's still more room for downside in these equity indices. So if you look at the 4-hour chart, it seems more likely these markets change direction. So even clearer chart would be the daily chart. So if I remove everything here, you would notice that this was a pretty big dip. The last time we saw such a dip was in July through to October last year. And now after the strong rally, it seems more likely that the market might be headed a little bit lower. So with interest rates set to stay higher for longer, then it's very positive news for equities. So after the big drop here, there was an immediate recovery, but it did not, or it was not sustained. So from the 1-hour chart, what we are seeing here is a continued bearish momentum. And yes, right now there seems to be some bullish momentum, maybe even to close the midnight gap, but then potentially I expect further downside momentum. So for US 500, it's a similar thing. There was this clean break here. Our market didn't quite get to our target of 5107, but then erased some gains and entered into negative territory yesterday. So close to lower for the day, and now we might be headed lower. So from the daily chart, this is what we are looking at. So 2 days of strong momentum, the third day bearish, and today we could be seeing some further bearish momentum. So Bitcoin made a surprise drop yesterday, and now it's trading at $64,033 per Bitcoin. But then it makes more sense to identify the kind of consolidations that are shaping around this area here, to know that there is some form of pause in the bearish momentum. And remember, this area was also the neckline after we had the inverted head and shoulder. So we could be seeing price bouncing back from this area, but it's a wait and see kind of scenario. So Brentwell made this huge drop. bottomed at around $85 per barrel. And then after forming this double bottom, you can see the W-shaped pattern here. Notice how the price is now accelerating from that new neckline. So now from $87.031 dollars per barrel, we are seeing a strong bounce and we are potentially going to break yesterday's high. And once we do that, there's a good chance that the market eventually heads higher and gets to our initial target. You can see the initial target on Tuesday was still $88.793 per barrel. So now we might see that becoming a reality for the day. So European equity indices also had a breakout and a very strong rally, but that failed to materialize. And what we are seeing here is now a pullback as the market heads back downwards. So it seems like indices are likely to pull back downwards. So same case for the French 40 index, very strong rally for 3 days. There is some gains yesterday, and today seems likely to be more bearish. So USD trading against the CNY or the Chinese yuan, it seems more likely that the dollar would be stronger. But now, seeing that we are encountering a weaker dollar in the market, this was a major resistance and a very strong entry by sellers in this pair. So it seems more likely that we will be seeing some further downside, potentially striking yesterday's low. So we could be seeing this continued for the rest of the day. Then for the Chinese equity indices, this seems very bullish. So for the week, it has been nothing but spectacular. A very strong rally since we saw this bottom here. So in just a couple of days, I would say 5 days, we have seen the Hang Seng Index rally 8.96%. So from the 4-hour time frame, this is how it looks like. From the daily, you know that this was an yearly trend line that started in January 2023. So for the whole year, the market had never broken this trend line, save for the last 2 days. So in the last 2 days, there has been a major breakout here, and this means that there is still more room for upside. So in this case, I would consider this as a strong signal that the Asian markets are recovering, specifically the Chinese. So the Hang Seng Index seems more likely to be a buy than anything else. So even judging from the current 4-hour candlestick, you can see the market attempt to pull back, and now it's continuing. Multi-year high, multi-year trend line has been broken. So in this case, I expect to see some further upside. So if there's anything I would call chart of the day, it would be the Hang Seng Index. So for those who have just joining the trading platform, the Hang Seng Index symbol is HK50 roll. So for the China 50 cash index, we had this triangle. I remember drawing this yesterday. So today, at the open of the market, there was a big jump here, indicating a clean break of the triangle. And of course, now the market heads higher. So it might also qualify as a chart of the day as we look at the continuation of this bullish momentum that has been happening for the better part of the year. So after this 2-week pullback, last week there was a strong rebound. We go to the previous high. Market prayed sideways for a while, and now this week we are headed for yet another high. So it seems more tenable that that market might be headed a little bit higher. Of course, don't forget to check out the FTSE 100 index or the UK 100, which made a new all-time high early this week. Then on Tuesday, formed yet another high. Wednesday, another high. Today, we are going for yet another all-time high. So for the UK 100 index, this is what we are looking at. We've already broken this trend line, and now we could be headed for a new all-time high where we will not be having any candlesticks on the left. So even if you go to weekly and check the monthly charts, you'll notice that the UK FTSE 100 has never been trading this high. So in this case, it makes more sense to look for positions that are bullish as you continue following this bullish trajectory. So that being mentioned, I'll be checking on your questions. So inflation is ticking up across all major economies, save for the Swiss franc. So central banks' statements are synchronized, interest rate decisions already baked in already. see the CME too. What will cause volatility? So the volatility is expected to come from the decision of the Bank of Japan. I'm assuming you're talking about the interest rate decision by the Bank of Japan tomorrow. So it's how they will address the current weakening of the Japanese yen. So if they address it by mentioning that they will be aggressive, maybe intervene in the currency markets, we could be seeing the JPY recovering. However, if there's nothing major, then the JPY continues sliding. Next question. Hi Rufus, how does the bank holiday of a particular country affects its currency strength against others? So a bank holiday means that the banks are not active or opening. So in that case, it means that there is no need to focus on that currency per se because there will be low liquidity. There will be less participation from that particular economy. So it doesn't strengthen or weaken the currency. It only means that there is low liquidity. So if at such a day there's a big news happening across board, what you basically do is that you trade a strong unilateral or unidirectional currency against the currency with a bank holiday because you don't expect much to be happening on the other side. So it's like having a free attack on a currency. So if there's a currency, let's say like the US has good GDP, you buy the dollar and then you trade it against the currency where there's a bank holiday, then that currency has less impact. In that case, you'll have a major movement as a result of the news announcement. We'll help now how to trend. I don't know what you mean by that. What is yield curve inversion and how does it affect forex trading and save for stocks? So when you talk about the yield curve inversion, it's basically a comparison between the yields on long-term government bonds versus the short terms. So the short-term government bonds often are referred to as treasury bills. They tend to indicate the sentiment from investors. So if an economy is stable and things are going well, investors are more willing to lend to the government for a longer period of time, whereas they are less willing to lend to the government for a short period of time. So demand for higher or longer dated government bonds increases the yield. So you find that the yield on the 10-year bond is much higher than the 1 or 2-year bond. So on the other hand, if investors are worried about the future performance of the economy or the government, they have uncertainties, they are no longer willing to lend to that government for a longer period of time. So they would rather lend it for 1 year, 2 years, and so on. So in that case, when they do that, what you normally experience is that the yield curve inverts, where demand for shorter term treasuries leads to increased yield compared to the longer term yields. And this is a key indicators that investors will be using in the markets. So when you see yield curve inversion, it often implies that there is a potential for a recession, and it has been used accurately to predict recessions over decades and decades of years. So in this case, we have an inverted yield curve in the US, where shorter term maturities are having a much higher yield compared to longer term maturities. And this is representing concerns that the US might be headed into a recession, especially considering the high interest, high inflation environment they are currently going through. So I believe that was the last question. Thank you very much, guys. If you are new to trading, make sure to check out the Novice to Pro course available on the FX Pesa YouTube channel. So if you would like to open a trading account, check out the links below. You'll be able to open either a live account or a demo trading account. And of course, the biggest announcement for the day is that the Bullish Banter podcast season 2 has started. We have now converted from audio only to audio visual, meaning that now we have video, and the latest episode is live on YouTube, and it's discussing oil. So if you'd like to know more about the oil market's outlook, what's currently moving the prices in oil, then check out all our podcast platforms. But I would recommend that you just check out the YouTube channel, FX Pesa channel, click podcasts, and check out the latest episode. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session.